how do you think about connecting price to the quality compounder and your willingness to pay for that type of business relative to the GrafTechs of the world?
Yeah, and I think that's an area where someone like me is at a big disadvantage and actually repeatedly makes a lot of mistakes because I'm a cheapskate at the core, and like I think one time Charlie Munger told me that you know Costco and Walmart had talked about merging a long time ago. Both were much smaller businesses then, and they couldn't come to terms on price. On kind of what would be kind of a fair kind of ratio to combine and so on. And the two walked away. And Charlie said to me that it really did not matter what the deal was. That wouldn't have mattered much. In the end, the pie would have been so much larger. And so what he was saying is that if these two forces had come together, two great cultures had come together, um, they compete pretty ferociously in the marketplace, and both have extremely unique cultures. And it is it is very likely you would not have had another entity rise up to challenge them, just like the situation today. That once you get past Costco and Walmart, you don't have another entity which has that level of culture and execution uh, in that space. Um, so basically, both and especially Walmart might have made a lot more money uh, in the absence of a Costco, or if Costco was part of Walmart, and not having to have Sam's Club and Costco would also have been an advantage. But so I think someone like me has a disadvantage because the unwillingness to pay up is a huge disadvantage. Like I'm thinking about this even for Costco. If I look at the stock, it won't look cheap. But if you know think creatively about where this company could be in 20 years, it could look very cheap. It could be very cheap under that scenario. But of course, the thing is that you're making assumptions about the growth and the competitive advantage and the culture being intact and all those sorts of things. So someone like me is still trying to learn to pay up, and it's probably worth paying up for the great businesses, especially the ones that have these huge runways ahead. But I think that where I am with my biases, uh, I'm stuck with the businesses that hopefully are great, but they get cheap every once in a while, and then someone like me can pounce on the bandwagon. And then the second thing I've got to learn, which also is difficult for someone like me, is if I buy something at 4 times earnings and it's a compounder, and I wake up after a few years and it's at 30 times earnings, someone like me is going to be looking to sell that. And that may probably be the wrong thing to do. And so there are two lessons that I have yet to learn well, the lesson to pay up and the lesson to hold on. But you guys are young without my biases, so maybe you'll get there.
As you think about this evolution and your willingness to potentially pay up for great businesses, how do you think about the numbers that you're willing to pay for? as you go out a few years? Because you've owned Moutai, for example, and you have owned some of these great businesses in the past. What is the number that you're comfortable with as you begin to explore that piece of yourself?
Well, yeah, like I think Mautai is a very good example. It's the most valued liquor company in the world. I think I bought our position less than 150 RMB per share, maybe about 4 or 5 years ago. It's now at about 1200 RMB per share. So it's gone up about 8x. Well done, Monish. But, the problem that, Monish has is that before it hit 1,000 a share, I was completely out. And I think probably my average selling price of Mautai, I think if I look back, maybe like between 800 and 900 on average, maybe somewhere around there. And so yeah, we captured a 5-6x over 5-6 years, which is pretty good. But Mautai is a business. I can't think of any business with a deeper or stronger moat than Mautai on the planet. I mean, I'd say if you look at Costco versus Mautai, I mean, Costco has to really execute really well every day. Every day when you go in and shop at Costco, you have to be blown away to keep coming back. Mautai is not in that situation. They've got this 1,000-year-old brand, and it's got mystique, it's got uniqueness, it's got a lot of things about premium in people's minds, and it's got this brand that is entrenched in the minds of north of 1 billion people. That's an extremely powerful moat. So yeah, I'm Monish Pabrai and I'm an alcoholic, and I should have never ever sold Mautai, but here we are in our AA meeting, making the confessions.